Hi everyone, this is Mrs. V Chen. Welcome to my Form 4 Foundational Accounting lesson number 9. Alright, so today we do 3 DSE questions on these statements of financial position. So before we look at the question, let us do some revision about what do we have in the statement of financial position. So before we look at the DSE question, let's do some revision on statements of financial position. So we always have these 3 big things in the statement of financial position, and then we use accounting equation to link them up. So we have this assets, which is always the same as the capital plus liabilities. And then there are 2 kinds of assets. The one durable, so will be used in the business but not for resale. They are non-current assets. And the one can be converted into cash within 1 year, so which are current assets. And then there are 2 kinds of liabilities. For non-current liabilities means the liabilities that we don't need to pay in the near future, and the one we have to pay in the near future will be current liabilities. How near is that? That means within 12 months, which is 1 year. Okay, so next we have this DSE question in 2014, and then what we need to do is to prepare for Mike. Mike is the owner of the business, and the statement of financial position as at 31st December 2013. Okay, so here is the statement of financial position. We always start with a nice heading, the name of the owner, and then always remember the time we show for statement of financial position will be as at, means as at 5 p.m. sharp on this date. So how much total assets we have. So this is total assets, consists of non-current assets and current assets. So this is the first half. And then the second half, we have capital plus liabilities, and then we have 2 kinds of liabilities. Non-current liabilities, that means the liabilities that we do not need to pay in the near future, and then current liabilities means the liabilities that we have to pay in the near future. So anyway, the final answer here on the first half and the final answer here on the second half must be the same. Alright, so for a trading firm or trading business, what do they do every day is to buy, sell goods every day. So they sell goods to customers. Alright, so there are 3 common names used for customers. So there are debtors account, accounts receivables, or trade receivables. That means the same thing. So these all 3 things means current assets. Alright, so and remember, when we do this statement of financial position, we always use the name given to us in the question. So here we use accounts receivables instead of trade receivables or debtors name for customers. Okay, so anyway, what is account receivable? So it is current assets. Okay, and then we buy from supplier, and then we don't use supplier's account. However, we use the common names. Some business they use creditors account for supplier, and some use accounts payables, and some use trade payables. Anyway, all of them same as current liability. Okay, and always remember we must use the name given to us in the question. So here is accounts payable, so we use accounts payable, so which is current liability. Alright, so next we have bank loan. So look at the dates is very, very important. So we need to pay in March 2015. So let's compare this from now here, 31st December 2013. So that means from here 2013 to 2015, that means the business does not need to pay this bank loan in the near future. So therefore this bank loan will be a kind of non-current liability. Okay, and next we have bank overdrafts. Remember bank overdrafts? So what is the meaning of bank overdraft? Let us do revision again. That means there is a negative balance in the bank account, and which is a credit balance, also same as credit balance in the bank account. Right, and credit balance means the credit side in the bank account is bigger than debit side in the bank account, so which is negative, that means which is also a kind of current liability. Okay, next we come to this unknown. Okay, and look at the dates for this capital, which is the opening capital, but however it is not given, but it doesn't matter because from the statement of financial position here we can work out the opening capital in this way. So later on this figure will be the balancing figure in the statement of financial position. Okay, and also this is inventory. So the inventory in the statement of financial position must be the inventory not yet sold to the customer. So this must be the closing inventory. Okay, and which is current assets. And how about furnitures and fixtures? We need to use furniture and fixtures, so they are durable and not for resale. So this is kind of non-current assets. Alright, next we come to a new item in this question, which is rental deposits, and I'm going to explain with you using double entry for rental deposits. And in the normal situation, so we are tenants. Okay, tenants means we have to pay rent for using the building. That means we are not the owner of the building, and then we pay money to landlord. Okay, so landlord is the person who owns a building. Alright, so since we have to pay rents and also rental deposits, so we pay money, we can pay cash, so that less money in the business, so less cash, or we can pay checks so that we have less money in the bank. Therefore, we debit rental deposits. Okay, alright, so what is rental deposit? Rental deposit must be a debit item. But however, what about this rental deposits? So since this rental deposit is refundable, that means if we are not going to use the building, and then we can get back this rental deposits from the landlord. Therefore, this rental deposit, since it is refundable, so that will be a kind of current assets instead of expenses in the income statement. Alright, so after all the analysis, now I can go to my statement of financial position. So for this accounts payable, which is a kind of current liability, so I have this accounts payables. So remember, always use the name given to us in the question, and then which is 15,000, so I put this 15,000 here. Okay, so next I have accounts receivable, which is a kind of current assets, but we don't start for current assets, we don't start with accounts receivable. Okay, so we have this inventory, which is the closing inventory, and now I have accounts receivable. Alright, so accounts receivable is 27,000. I put that in this column. Okay, next I have bank loan. So for the date here, we don't need to pay in the near future, so this is a kind of non-current liabilities. So here I have my non-current liabilities. So this is bank loan. Since I have only one item for bank loan, I just use this column here to show bank loan, which is 22,000. Okay, next bank overdraft, a current liability. So here, current liabilities, I have bank overdrafts, so which is 11,000. Okay, so what's next? So opening capital, we don't know, it doesn't matter. Okay, so next we come to furniture and fixtures. So I have my non-current assets here. So furniture and fixtures, 63,000. Okay, and then now I come to inventory, which is always the closing inventory to be shown in the statement of financial position. 7,000. Okay, next, net profit for the year 3,800. So add net profit to capital, so I have this 3,800. And finally, the new item, rental deposit, should be a kind of current assets, so because it is refundable if we are not going to use the building. Rental deposits. Okay, so 20,000. Alright, so let me highlight the new thing in today's question. Rental deposit should be current assets. Then you can use calculator to sum up these three figures to get total current assets plus non-current assets. So we get this total assets 117,000. So the first half must be always same as the second half total here. So I also put 117,000. Okay, now I have enough information to work out the unknown, which is the opening capital. Alright, so I have two items for current liabilities. So that 26,000. This is total current liabilities. Okay, so I have this 117,000 minus 26,000 minus 22,000. Alright, so this is closing capital. Therefore, minus this 33,800. Okay, so I get the unknown figure, which is 65,200. So this is how we work out the unknown figure for opening capital. So we call this figure as balancing figure. Alright, so the second question in today's lesson is DSE in 2015. Okay, so what we need to do for the analysis, so here we have bank loan. Now the date is very important, so which is repayable in September 2015. So compare this with 31st December 2014, so which is within a year. Therefore, what is bank loan in this question? It will be current liability. Okay, and this is the opening capital, which is not given, but anyway, we can work out the unknown as balancing figure in the statement of financial position. Okay, and then the new item in this question, we have fixed deposit, which is new in this question. Okay, so what do you think about fixed deposits, which is a kind of assets? Okay, so but since this is 6 months, we can convert this fixed deposit, okay, after maturity after 6 months by taking out money from fixed deposit and change that into bank, so that it would be a kind of current assets. All right, and we have this trade payables. Okay, same as creditors, same as accounts payable, but we always use the name given to us in the question, and this is current liability. And then trade receivable, same as debtors, same as accounts receivable. All right, so which is current assets. Again, first half total assets consists of non-current assets and current assets, and then the second half we have total capital and liability. Okay, so bank loan, all right, which is current liability, so I put bank loan here. Okay, so how much? 430,000, so 430,000. Okay, capital is the opening capital. We don't know at this moment, so cash at bank, current assets, but we always start with the nice order. We start with what? The closing inventory. All right, and now we come to the new thing, which is fixed deposits. Okay, so this is a new item, fixed deposit, 6 months, the maturity date. So that will be a kind of current assets. Okay, so what else? I have trade receivables. Okay, and then I have cash at bank. So always use the name given to us in the question. So the definition for this current assets, they are able to be converted or able to be changed into cash within 1 year. Okay, so finally for non-current assets, so what else do I have? I have motor vehicles, which is 986,000, and then inventory, always the closing inventory in the statement of financial position, so 210,000. Okay, so and then what's next? Fixed deposit, the new item, 180,000, and trade receivable, I have this 320,000, and cash at bank, 398,000. Okay, so I have finished all the things for total assets. Now I use my calculator to get current assets. Okay, so I have this 1,108,000 for total current assets, and then plus non-current assets, so plus this, so that this is total assets, which is always the same as the sum of capital and liability. Okay, so what's left here? I have done motor vehicle, all this thing done, and then now we come to net profit for the year. Add net profit to opening capital. So here I need to add net profit to opening capital, so which is 82,000. Okay, so what's left? Net profit, and then trade payable as current liabilities. So 383,000. Okay, so that's all. So total current liability. So that this is total current liability. Okay, so sometimes to show it nicely, here I can move up this line up right next to this, and that way, so the detail for showing this bank loan, trade payables, and this is total current liabilities. Okay, so that is a minus and then plus. Okay, so I get 1,281,000, and then minus this net profit to get the balancing figure for opening capital. Okay, so this is it about the question in 2015. Here we come to the final question in today's lesson, which is DSE in 2018. Okay, so what we need to do is also prepare a statement of financial position for the owner and who is Mandy. Alright, so in the statement of financial position, we always start with this assets is equal to capital plus liability. But however, actually there is another format, another way to show statement of financial position, and I'm going to explain to you in this way. Alright, so assets, always two kinds of assets. The one durable means non-current assets, and the one can be converted into cash within 1 year are current assets. So this is what we have on the left hand side. And then now we come to capital plus two kinds of liability. Okay, so the one that we do not have to pay in the near future will be non-current liability, and then the one that we have to pay in the near future, we call that current liabilities, right? So since this is an equation, and then we can move this current liability to the left hand side, so therefore I have this non-current assets plus current assets, and then let me move this to the left hand side, so that becomes minus current liability, and then what's left on the right hand side, I have capital plus non-current liability. Okay, and actually we have a name for this current assets minus current liability. We call this working capital. Okay, so what is meaning of working capital? Working capital is same as current assets minus current liability. Okay, so this is a new thing today. And then what about if this working capital is positive? So what is meaning of positive? That means which one is bigger? Current assets will be bigger than current liability. And then we have a name for this. We call this as net current assets. Okay, so what about the opposites for working capital? If it is negative, that means this time which one is bigger? Current assets would be smaller than current liability. Then we call this net current liabilities. Okay, so this is a new thing about working capital, which is same as current assets minus current liability. And then we may have two situations. Okay, and therefore this is the new format, another way to show the statement of financial position. Okay, so the first half we have total assets consists of non-current assets and current assets, and then we move this current liabilities up. Okay, so therefore it is less current liabilities. And then what's left? So that will be capital, opening capital. Okay, and in this question there is no non-current liability, and that's all about the things in 2018. Here we come to analysis of the question. So bank loan to be matured in July 2018 is same as to be repayable in July 2018. Make comparison with the date here, which is less than 1 year. So therefore the bank loan in this question is a kind of current liability. And also, okay, you go back to the beginning. On 1st January, Mandy commenced a sole proprietorship. Commenced means started the business. Okay, just started the business on 1st January, so that in that situation there is no opening inventory. Okay, and also what is special in this question? So look at this capital, which is unknown. All right, and also net profit is not given to us. Therefore, in one equation, if you have two unknowns, that is not possible to find this balancing figure as opening capital. So therefore, we need to also find net profit as well later on. So here I have non-current assets. So there are motor van and equipments. All right, so here we have motor van as non-current assets and the equipment as non-current assets. So therefore, what is meaning of this 216,000? This one is the total non-current assets. Okay, and then next we have current assets. Okay, the inventory, always the closing inventory, and since we do not have opening inventory, and then we are given closing inventory. Here inventory of the firm was valued at 26,000 at the dates here, the closing dates. So this is closing inventory 26,000. Okay, and then trade receivables, current assets 13,000, cash at bank, so which is a positive balance in the bank accounts. All right, so therefore, what is meaning of this 55,000? This means total current assets, and then minus current liabilities. So if we move current liabilities to the left hand side of the equation, all right, that becomes negative. And there are two current liabilities. They are bank loan, okay, as what we have analyzed before, 30,000, and trade payable. Okay, so this is trade payable for 8,000. So that 30,000 as bank loan, 8,000 as trade payables. So since we need to show the details, so here we need another column. All right, so what is meaning of this 38? It means total current liability. Okay, so and then 17,000 is the total current assets minus total current liability, so that we call this working capital. working capital. As we have mentioned here before, working capital is the difference between current assets and current liability. All right, so therefore this is positive, and then add this total current assets. We have the first half 231,000, and then the second half must be the same, 231,000. Okay, so next, capital is unknown and net profit is not given as well. Okay, so that's two unknowns, one equation not possible. So the next thing is we need to work out net profits before we find the unknown as opening capital. Again, here we do revision as well. Net profit is equal to gross profit at revenue minus expenses. And then what is formula to work out gross profit? And here, net sales minus cost of goods sold. This is gross profit. And since there's no revenue, we skip revenue and then minus all the expenses. And then now we come to net sales. Okay, since there's no returns inward, so we just have sales. And then this is important, so use brackets, all right, because this is a negative one. So minus cost of goods sold, and the formula of cost of goods sold is opening inventory plus purchases minus closing inventory. And in this question, we don't have carriage inwards, we don't have returns outwards. Now, okay, we can use this formula to work out net profit, which is equal to, okay, so how much is sales? Sales on top is 220,000. So this is my sales, 220,000. Okay, minus, so use bracket is very important. Okay, so no open inventory as Mandy just started the business. Okay, but we have purchases. This is purchases, 98,000. So 98,000 is purchases, and then minus, okay, 26,000 is the closing inventory. So minus 26,000. Okay, and how much expenses? So here operating expenses, 105,000. So 105,600. Okay, now we can use calculator to work out net profits. All right, so after that, you can use calculator to work out net profit, and be very careful. There's a negative one, and we use bracket so that when you use calculator, don't make any careless mistake about this one. So that would be plus 26,000. All right, so that I put net profit here, 42,400, and then show workings again here. So this is sales, this is purchases, minus closing inventory. So net sales minus cost of goods sold. So we have this gross profit and minus all the operating expenses. So now we have solved this unknown net profits. Then we can work out another unknown for opening capital. All right, so the final answer for opening capital will be 188,600. Okay, this is the balancing figure again for workout opening capital. Okay, so that's all about today's lesson. So thank you for watching my video. I'll see you next time. Bye bye.